Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng down almost 0.6%. The Taiwanese index is the big underperformer.
The resistance is unchanged, 61.8% retracement, which we put out yesterday morning as well.
If it involves transfer of money, well, that's simply not permissible. That's what sources are telling us.
Slightly sideways, 19, 20, 25 points lower, 24,950 on this Nifty.
The high momentum and the breakout of those multi-month ranges, we think there's further gains to be had in the auto space.
Absolutely no contribution of real money gaming revenues in this financial performance.
We may not be the best market for the current year globally,
right,
but on 3-4 years basis, I think we are the best markets.
It's a green-looking screen, however, the gains are not as high.
Serious breach of the master circular.
It has come off slightly from the highs, but we'll track those moves, what happened, especially in the last 1 hour of trade.
Well, that is the day so far. Markets are looking good. At 90 points nearly on the Nifty, 25,066. And I think unlike yesterday when mid and small cap indices were outperforming in a big way, it's more measured, 1/3%. But single stocks, no dearth of individual names, 5, 10, 15%. And you wonder what's going on. We'll talk about many of those names here over the next 60 minutes. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Rima and Nigel with me. Guys, good afternoon.
Hi. It's a good screen, right?
Yeah.
Considering we had Monday was a big day. Yesterday, there was positive bias. And again, today, we're at the day's high. The Nifty's crossed the 50-day moving average and well above 25,050.
Well, that's right. And we've had 3 good sessions for the markets. But the man who's going to have a good evening is Prashant, who's celebrating his birthday party this evening. And we're looking forward to getting onto the dance floor, grabbing a drink, and, turning up to motorbike as well.
I think Nigel is going to do a full jive move. All right.
Please show up wherever he's going because he's ready to party on your behalf. So you need to be there.
All right. Well, let's just quickly run you through what's coming up here over the next 60 minutes or so. It's turning out to be a decent day, absolutely a decent day. Actually, 100 points from here, and you're essentially at that 61.8% retracement. That is 25,160 or so. We're at 2560. And you can see the other indices as we put them up on the screen as well. IT pack today is, yesterday was the underperformer, started slow, but I think it's picking up a little bit of pace. So we'll talk about this as well. There's a Kotak note which Rima will outline for us. Big move on Ola once again, 14-15% today after yesterday's big move. So, what's triggering this move? Sudarshan is going to come back on that. And of course, Nazara Tech and taking a bit of a knock after online real money gaming has been hit with a blanket ban. So that's a story which we continue to track. Started about 4-5% lower, down a full 11.5% excerpts of the interview that we had with the management as well. So that's what's coming up here over the next 60 minutes or so. But before we go any further, I just want to quickly outline these names and. These are all just...
Prashant, I just want to come to you in just a bit. We have a clarification coming in for Vedanta. And Vedanta to CNBC-TV18. We had asked them to clarify with regard to what went on today in the courtrooms. So the important clarifications that are coming about, they're saying that the demerger being stalled is actually incorrect. They're giving their view. They're saying the NCLT hearing on the demerger is actually adjourned to September 17th. So that's going to be important. They also go on to add that the process is ongoing and SEBI hasn't opposed. According to what they have to say, it's only issued a procedural caution. So, this is in response to the queries that we have put forward to them. And finally, with regard to the verdict on TSPL, which is their power asset, they're saying it's not linked to the demerger, but that is a legacy issue. So just putting out the clarification out there, Vedanta saying there were 2 separate issues. They believe that demerger is still on. And in fact, they're clarifying that the Supreme Court verdict on the power asset is a legacy issue. And it doesn't have to be mixed up with the demerger. So hopefully we'll try to get the management on the show as well. But for the time being, the crucial responses are being run for you on the screen. Yeah, Prashant.
No, absolutely, and I think it's an important one. So important to take Vedanta, the company's view on board as well. You know, I was just putting out these names as nothing but question marks, and maybe our guests a little later will answer what's going on here, right? Put up Bluestone, 10% higher. It's a big one, third largest volume-led gainer. There is Protean, which is up about 18.5%. Bluestone, of course, is the recent listing, it's a big gain. Protean is up 18%. This HLE Glass continues to do very well, 6% today. Carborundum Universal is up 9%. There is Newland Laboratories, which is up about 6%. Intellect is up 8.5%. Intellect Design. We reported on Sula, which has cooled off a little bit, but still 4%. EKO Lighting, 20% higher at this point. Sai Silk, which is Kalamandir, is up about 9%. And there is a company called Prostam, 10%, 213. So, I mean, individually, so many names are jumping up with so much excitement that you wonder what's going on. One thing common for at least a few of these names that I mentioned is that they've all essentially been damaged quite a bit from the highs. They've all sold off quite a bit from the highs, names like Protean, etc. So, maybe a little bit of buying coming through. And of course, I mean, the fact is, when large caps don't come off and large caps stay steady, mid and small caps also get a bit of backing, get a bit of courage, and people go hunting. So, but we'll try at least and touch upon with these individual names as we go along with our guests in a bit from now. Guys.
Well, some more movers. On the large cap screen, it's a lot about IT. Infosys is your top gainer. That's up nearly 4%. TCS higher by 2.5%. Tech Mahindra is seeing buying. Consumption names continue to be in favor. Big gains seen in HUL and Nestle. It's a gain of close to about 2.5%. In fact, HUL and Nestle have moved up 8 to 9% so far this week. So seen as a clear beneficiary of the GST rationalization, and money continues to move. So FMCG is doing well today. IT is also on the front foot after a long spell of underperformance. Some other mid caps, we'll talk more. But Ola Electric, another move, 15% higher. This week, Ola Electric has rallied close to about 15%. Bluestone Jewelers listed yesterday, and now it's inching towards that 600 rupee mark. Hotel stocks like Lemon Tree up and about, and auto ancillaries like Jamna Auto continue to see buying too.
Okay, all right. How do you position yourself though in the final hour of trade? We have Rahul Sharma, Director and Head of Technical and Derivatives at JM Financial Services, who joins us on the show. Hi, Rahul. Good to see you. I was hoping to get you actually at around 24,300, because out there, as you always point out, when things get stretched, with regard to the RSI, with regard to the PCR, and with regard to the short positions. Now, how much of this covering bounce has played out, and how much higher can we go from here, Rahul?
Yeah, very good afternoon, Nigel. So definitely, today is one of those key sessions where we've taken out the 25,000 mark. Lots of straddle activity was seen in yesterday's session, where the bulls and bears literally had a fight over the last two sessions, whether 25,000 will be taken out or not. But looking at today's traction, we feel that Nifty has opened doors up to 25,400, which is a possibility of another 400 points from current levels. And we are not to forget that we are coming out from a 6 to 7 week of underperformance. So on one side you have global markets which are pretty robust, US markets near lifetime highs, Nikkei, Japanese markets doing well. So overall net a lot of catching up to be done for our domestic markets. And in the short term, I think a good 400-500 point jump can be expected in the Nifty going ahead from here.
Okay, so markets headed higher, 400 to 500 point jump possible on the Nifty. Any stocks, Rahul?
Yeah, so, if we talk of sectors, so cement is one space, that is broken out from multi-week consolidation. Ultratech cement looks good at these levels, can be bought for an immediate upside of 5 to 6% from current levels. But I think the star sector has to be the metal sector. So Chinese markets have been doing well. We see the China A50 index. They have come out of multi-week consolidation. That reflects onto the positively on the metal index, and Tata Steel is one of those which can be the biggest beneficiary. Now, technically speaking, the stock has been sideways. It has not corrected as much as the broader market has. And now I think the time is right for a breakout in the same. So on an immediate basis, 175 is the target, but positionally, speaking of slightly more medium term, we may very well be headed towards targets of 190 as well. So both positional traders as well as short-term traders can have a look at Tata Steel, which is the index heavyweight in the metal space and can dominate this space going ahead from here.
Quick word, Rahul, on the Nifty IT. You're seeing momentum today, but does it have legs to run higher from here?
Yeah, so purely from a risk-reward perspective, IT index has formed a short-term bottom and traders can participate in the same. However, the institutional participation has still not shown up, which means no big volumes as such. It should bounce back along with the market and provide some support to the Nifty index as well. But having said that, it's best to be a trader in the IT space where we feel that there will be a lot of investors who have been stuck into this space who would be wanting exits, and sell on rise is something that may happen in this sector. So from a very short-term trading perspective, yes, maybe a 4 to 5% upside can be had. But overall, from a slightly more zoomed out perspective, I think there could be some more pain left in this sector.
Okay, all right. Rahul, what about the big boy? Tech is finding its form, but the big boy is the banking index. It reminds you of the 1990s when India did well, but Sachin didn't perform. Then wo boost, you don't get that kind of margin. If Sachin can perform, that is, the Nifty bank, then we could be, heading back towards, maybe towards the fresh all-time highs. What do you think about the Nifty bank?
Yeah, absolutely bang on. In fact, since last few trading sessions, Bank Nifty has, seen good traction, especially led by PSU banks. And we feel that, there is more upside to be had in the PSU banking space. Even private banks, for that matter, the technical structure has improved. On one side, we have HDFC Bank, which is as solid as ever. We have ICICI and Axis, which are improving from lower levels. So speaking of specific levels for the banking index, I think 56,000 and above, we should see more short covering happening in the banking index. And net from a comparative basis, this sector has led the market for most part of this calendar year. And we feel that the rest of the next 3-4 months could be the same case as well. So from an investor perspective, from a slightly medium-term perspective, we feel that there is a good upside to be had in banks. Somewhere around the 60,000 mark is where we see the Bank Nifty heading towards over the next 2 to 3 months time frame.
Okay, thank you, Rahul, for joining in. He struck an optimistic note, and now the Nifty is inching towards a 100-point gain. But the leader today undoubtedly is the IT index. The Nifty IT index is up 2.6%, and this is after a big round of underperformance. Year to date, the Nifty IT index is down 18%, while the Nifty is up 5%, which means an underperformance of nearly 23%. And many stocks are down about 25-30% from their recent highs. So TCS is off 32% from its 52-week high. Infosys, HCL Tech also declining by nearly 25%. So 25% off its 52-week highs. Now, Kotak has written a note on Infosys. This is following their meeting with the CEO, Salil Parekh. There are no big takeaways broadly on demand. It's still status quo, which means clients are focusing on cost optimization. There is no change. Company is reasonably confident of meeting their guidance for this year. But a couple of things that stand out from the note. One is the AI readiness of Infosys that Kotak likes. They're saying that Infosys is the AI partner of choice for 10 out of its top 20 clients in the financial services vertical, and the company is hopeful of being a beneficiary in vendor consolidation. Secondly, because the company focused on margin maximization, eking out all the margin efficiencies early on in Q2 of FY24, which basically means nearly 2 years ago, the companies managed to hold on to their margins despite an adverse demand environment. And two, they're able to participate in many of these cost optimization deals, which are competitively fought. So that's the second reason. And third, on M&A, the company told, Kotak Institutional Equities that their acquisitions would be focused on growth areas. And in this calendar year, their priorities are cybersecurity, EU's energy and utility consulting, and cloud services in the ANZ region. So Kotak likes the stock. 1850 is the target price. They're saying the stock is currently trading at 20 times forward multiple. According to them, the fair value should be at 23 times. Prakash is now joining in on the markets. And Prakash, let me start with IT. Is this just, some sort of a tactical bounce, money finding its way to underperforming sectors? Or do you think we've formed some sort of a bottom and these large cap stocks are looking attractive now?
Good afternoon, Rima. But, the answer is yes to both your questions. The fact that some of these large names got battered down on the back of poor earnings and poor visibility going ahead is the reason why you see these bottoms being made. Now, there could be a time correction as well. There could be consolidation at these levels. I mean, you mentioned about TCS being almost like 25% off its 52-week highs. I mean, that 25% is a fair distance to kind of catch up on. And in that sense, it will need much more than just a tie-up with a Finnish retailer, to kind of get confidence back. But what's interesting is, and I can tell you this after having spoken to a lot of players in Europe and the US, that most companies that are adopting AI with a very accelerated pace are actually finding far more efficiencies in doing so. So while it might have a very second-order effect, which is very ugly on the employment and all, somewhere around the end of this year, there will be very clear headwinds which will talk favorably about AI being adopted, and some of these players like Infosys, which are on the forefront or have a lead, some sort of a head start, they start kind of getting valued much more, favorably. So I think from now to December is the period where consolidation could happen. It could not probably be the sector of choice, but it will definitely make better, sense to kind of start nibbling into it at some point in time. I'm not too sure. I'm not too sure whether the US market impact will impact them again. If something goes wrong in the US in terms of its debt and repayment of debt and all of that, there could be a setback. The inflation numbers are still not kind of clear yet. So there's lots of ifs and buts, but I think it's bottom fishing which is happening. Institutional money is coming back, and it will have to go to the large caps. Banking is probably not offering that solace, so IT is probably making up for it.
Absolutely. And, the other story, Prakash, which was the online gaming, we spoke with, the Métis secretary, our colleague Shireen, spoke with him, and he was absolutely clear in terms of what the bill proposes and why they're doing it. You may agree and you may disagree, and there are those in the industry especially who disagree the way it's being proposed to be done, but absolutely clear-cut thoughts from the Métis secretary earlier. Nazara is the stock, right? I want to pull up. Stocks, I think, has fallen a little bit more after that interview. We spoke with Nitesh Mitterson, Joint Managing Director of the company. So I just want to play out a quick soundbite there. Listen in.
There was no contribution, absolutely no contribution of real money gaming revenues in this financial performance. What that really means is that even going forward, since we are not having any contribution by real money gaming in our financial numbers that we report, there is no disturbance or issues with what we will report going forward. And the company continues to grow strongly, profitably. Now, we do have an investment in Moonshine Technologies, which runs PokerBaazi. We own 46% in the company. And it's speculative now because we don't know what is the content of the bill. But if there is a move, as media has reported, to ban online real money gaming, then of course that particular investment could potentially be at risk. If you see our recent acquisitions that we've done in the last year or so have all been focused on the core gaming IP business, which is a very profitable, very cash flow generative business. We generate through games that are popular all over the world. And that's already something we've been very focused on. In recent commentary also, we've said we're doubling down our focus on core gaming IP. So I think we already have, a very strong pathway for growth. We're already delivering it. As you saw this quarter, we delivered 100% year-on-year growth. And I don't think our strategy changes at all at this point of time.
Volumes on Nazara, that's the management, of course. The volumes on Nazara are the highest in September of 2022. I think Hormuz is also telling us that these are pretty large volumes that we have at this point in time. Yeah, 92, 93 odd lakh shares already traded on your screens now. Any thoughts, Prakash? Nazara, I mean, there's, of course, if this is done and the bill is passed in the current form, that investment in PokerBaazi goes away,
Yeah.
But in terms of actual P&L impact, as Nitesh pointed out, there's not very much. There's actually nothing in terms of an impact. What's your sense?
Yeah, so I think it's that write-off that is going to impact the company. Since there's not much of contribution on the P&L from this online, real money gaming business, I don't think they will get impacted. What he's saying makes sense. But remember, these are things that, take away a lot of sentiment. I mean, it's like, am I going to buy the stock as an investor, especially as an institutional investor, if it's 12% down, just because the impact has been digested? It all goes back to what's the growth area. Now, Pokerbazi, when it was acquired, was supposedly a very big fillip to the new vertical or new revenue stream, and now that's gone away. So you'll have to price in into your model in terms of what's the organic business growth from whatever they're doing. Most of it is IP-driven, international markets, so they're fairly safe on that. But yeah, it will kind of make people rethink in terms of buying it at some level. You would probably drift it lower, see it drifted lower, and then things could look different.
The Metis secretary very clear that social good takes precedence over the loss of revenue to the center or even job losses, saying that thousands of jobs may be lost, but crores of people are impacted, perhaps on account of financial loss or addiction. That's Nazara. Stock is down nearly 12%. The other big buzzer, and it continues to be, is Ola Electric. Another day, another big move. Sudarshan joins in to tell us what's getting the street excited. Sudarshan, now above 50 rupees.
That's correct. So do you know the same day in August 2024, stock was at record high of 157, and the similar kind of move that we are seeing today, it's up another 15% after yesterday's move of 9%. So for this week, stock is up almost 30% and up more than 35% from 52-week low that stock had seen last month. Now, if you take a look at the volumes, so today's volumes are 90 crore after yesterday's volume of 58 crore. So if you take a look at yesterday's volume, it was 5x if you compare against 20-day average. So 20-day average of volumes was 11 crore and yesterday's volume was almost 60 crore. Now, if you look at the deliverable quantity of yesterday, it was 14.6 crore. That was highest in last 2 months, and almost 25% that was marked for delivery. Now, if you look at the shareholding, so while FI's holding has come down, if you compare from December 2024, when the holding of FIs were almost 39%, now as of June 2025, that has come down to 34%. So there is 400 basis points decrease. But if you look at the domestic shareholding, it's an increase of 400 basis points. From 19%, it has gone up to more than 23%. So now it's as of now. So what is going forward? So some of the tailwinds that company has mentioned after Q1 earnings had improved on a sequential basis, and after that company commented that in Q2 auto business will turn EBITDA positive, and in FY26 it's targeting auto business EBITDA margin of 5% or more. Now again festive season is coming, so company is looking to launch few products, and it's bullish on its bike, that is Roadster. Also another positive is China has lifted carbon rare earth magnet supply. That will also aid growth to companies like Ola Electric.
Thank you very much for that. Prakash, Sudarshan has just laid out all the tailwinds that lie ahead. But on the flip side, if we do get this GST rationalization on small cars, two-wheelers, it will make your conventional, ICE vehicles more attractive, which could hurt EV adoption. So explain to us, fundamentally, Ola Electric at this price, how does it look?
So here's what I think we need to look at. We need to look at hard numbers. Fundamentals will always go back to assessing what the numbers speak. There is hope that it will turn EBITDA positive in Q2. So we'll have to wait for those numbers to end. And, being EBITDA positive is one thing, but moving to that 5% margin, and, do you really want to pay as much for a company with that kind of margin profile is a question individual investors will need to answer. The second thing is rare earth magnets being now available from China is actually more competition to Ola, because Ola was talking about a gigafactory where they could make batteries without relying on rare earth magnets or elements to make those magnets. So they have a different tech that's yet to be proven again. So there are lots of things which will need to be done. So I think there is still some time before you can kind of pop the champagne and say, okay, things are looking very positive. And in they're not going to be reversible in that sense. We've seen this happen on a lot of businesses which are yet to find their feet, but I think competition is extremely intense. It's going to be hyper competitive for them. And if cars become cheaper, there's a huge migration that happens from two-wheelers to cars very quickly, especially entry-level cars. So, there'll be too much of market share dynamics that will be very quick and fast-moving. I won't personally look at buying into this just because of these things working out temporarily. It's just because Paytm's moved from the dumps into something very bright. Eternal did that. We have a lot of these cases where things are turning around. So people are comparing that, and it's just FOMO that gets most of the attention. But I think fundamentally there's still not enough evidence for it to be kind of celebrated.
Got it. Okay. All right. Prakash, thanks a lot for joining in, giving us your view on all of those names. Wishing you a good rest of the day. Time to slip into a short break. On the other side, Mithun Ashwath, managing partner, Kiva Advisors, will be joining in to help us out with his take on the markets, and maybe he'll share a couple of stocks as well.
Welcome back. Let's put the spotlight then on the top movers at this hour. Hormus joins in. Hormus.
Well, a lot of big movers in the small cap space, 10 to 20% gains for a significant number of shares. They start off with Dynamic Cables. First up, it's well over 2,300 crore companies, the biggest single day gain that the stock has seen since May. We've had 50 lakh shares traded compared to the 20-day average of 90,000. But interestingly, the stock in the last 4 years, starting 2021, has doubled in value every single year. So in 2021, the stock was up almost 160%, 22, 117, 23 and 24 also seeing returns of well over 120%. This year, despite this 20% move today, is down year to date, but is down only 1 to 2% now, courtesy of this 20% move. Foseco India is the other one that too has seen double-digit gains today. Now take a look at the volumes here. 2 lakh shares have been traded today compared to a 20-day average of just 8,000. It's broken above its 50-day moving average in yesterday's trade when the stock was higher as well, and this too has delivered positive annual returns every single year since 2020. And so the other one in this list is Suraj Estates. It's a recent listing. It's the biggest single day gain that the stock has seen since March. This 12.5% move. It's broken above both its 50-day moving average and is now nearing its 100-day moving average, which is at 326. But despite this move, the stock still remains below its IPO price, which is 360 rupees, and has nearly halved in 2025 so far. So trimming some of those losses is Suraj Estates. Sai Silks is another buzzer today. Another recent listing is the biggest single day gain since August of 24. And this 19th to 20th August period, it has some affinity with it, because on the 19th of August last year, the stock was up 11%. Today, the stock is up 9% in 2025. We've already had almost 30 lakh shares change hands compared to a 20-day average of just around 14 lakh shares. It's turned positive year to date, courtesy of this up move today, but still remains below its IPO price of 222. And the last one of this list is Oriental Rail Infra, another 10% up move, which means the stock is up 15% in the last 2 sessions. It snapped a 6-day losing streak yesterday, and as a result of this move in the last 2 days, the stock has broken above its 50 and its 100-day moving average. Back to you guys.
Okay, Hormuz, trust Hormuz to find interesting correlations, historical data, last this happened, etc., etc. So lots of stuff there. Hormuz, thanks very much for that. Mithun Aswath is with us, managing partner, Kiva Advisors. Mithun, good to have you with us here on the program. Thanks very much. I think we're chatting after a while, so welcome back. So just a quick word first on the index. We're at 25,000, Mithun, and I believe that you see another 10-12% kind of upsides from here, which basically should, in what time frame, and is that predicated on something, earnings revival, or you think it's good to go given where valuations are on the Nifty right now?
Good afternoon, Prashant. I think where we're seeing that 10-12% upside is primarily from, if you look at earnings for FY27, and if we to discount that, we would get about that 10-12% upside based on historical averages. So, any dips in the Nifty towards the 24,000 sort of levels provides you a reasonably decent upside based on that 1-year forward earnings. And as we move closer to December to March, we start discounting, I think, forward earnings. So I think that's where we'll put it as. Obviously, in the near term, these ramifications of the potential excess 25% tariff on India will, put kind of a negative impetus to the exporters, especially, the textiles, some portions of auto components will be affected. But I think if that was to get reversed before the 27th of August deadline, that would provide, another fillip to the markets. As well, the US, there is some expectation of a rate cut by the Fed in September. So I think these couple of pieces of news could propel markets. Domestically as well, the government is talking about GST rationalization. That will also provide some demand push. However, we need to see from when they will implement this, because in the interim, people may postpone purchases of certain products if there is going to be a GST cut.
Got that. Mithun, one of the stocks that you like is TVS Holdings. Tell us a little bit about that. We know it's the holding company for the TVS Group, so they have, the two-wheeler maker. I think even Sundaram Clayton is another, entity that they own. So tell us a little bit more on why is it attractive at this juncture?
Yeah, so good afternoon, Rima. TVS Holdings, basically the holding company of TVS Motors. Earlier, they used to own the real estate business of TVS Group as well, called Emerald, which they exited. And that is when, the market, took this news quite negatively and the stock corrected quite sharply. Post that, we've seen that the management has said that they want to grow the NBFC business into quite a large opportunity. Within TVS Motors itself, you have TVS Credit, and TVS Holdings directly has now acquired an 80% stake in Home Credit Finance. So, these businesses would be, where, the growth driver for TVS Holdings would be there. And obviously, the holding of TVS Motors itself is valued at more than 75,000 crores, while the market cap of this company is in the range of 20 to 23,000 crores. So I think that is a significant upside for patient investors, and is a good way to play maybe even the growth in TVS Motors, plus the credit business, where the management has talked about growing the credit business to about a 50,000 crore balance sheet over the next few years.
Hi, Mithun. Good to see you. When I wanted your view on a couple of other names. Eveready, I think, is a stock that we discussed in the past that you were quite positive on. The battery got drained out, actually, once the new promoter took over. But now it's finding its form yet again. I think that crucial KKR settlement, that clears the path in case they want to raise some more capital. Any view on that name now?
Yeah, I think, it's tested our patience. It's moved up and down, and now it's hopefully on the right trajectory. Obviously, that KKR resolution will also help the company to offload any assets, non-core assets that they own. They could be in terms of, land where, there are certain plants that they currently have, because they're putting up a large facility in Jammu and Kashmir for the alkaline batteries. And that facility could also house other products from Eveready. So I think over the next few months, once this resolution completely is kosher, the promoter could also infuse capital if required. Plus, there could be this opportunity of selling some of these non-core assets.
So you continue to remain positive on this one?
Yes. Very much.
All right. I hope for you're good, and all your investors good, that good things take a long time to come. So let's see whether or not that plays out. One more stock is Vedanta, I think. We've discussed it in the past, if I'm not mistaken. You have that news flow today with regard to, the demerger that earlier they thought in Q2 it will get done. Then they thought it will be Q3. Now you have some stern comments that are coming there, though the management has responded to our query, and they say demerger, they believe it's in the process and there's no big rejection of sorts. The stock, to be fair, is down only 1% right now. You believe there's still money to be made out here?
Honestly, I think we're quite deep in the money for our investors when we've suggested this company, and it continues to provide a very strong dividend yield. And if we do see some revival in the non-ferrous metal prices, obviously Vedanta will benefit with this demerger or not. It doesn't really matter. Obviously, there could be value unlocking through the demerger, but in itself, the stock is not very expensive, since that dividend yield provides that kind of cushion for Vedanta. Also, its large holding in Hindustan Zinc. Hindustan Zinc themselves have talked about a large expansion plan. So I think, the dividend yield provides that kind of floor to the stock.
Okay, all right, Mithun. Thanks a lot for joining in and filling us in with your take. You're sounding way more optimistic on the markets, and thanks for discussing a few stocks as well. We have the disclosure that comes up for our viewers on the screen. But it's that time of the day when Nimesh gears up, and he's here to tell us about D Street chatter. Nimesh, what are you picking up today?
Hi, Nigel. Another strong day for the broader markets. We spoke about a lot of buying interest in broader market stock, especially from a bid point of view, and that seems to be the trend today as well. So big moves in a lot of mid-cap names. A lot of individual stocks are up between 15 and 20% as well. I was looking at the entire list, right from Ola to Protein, E-Government. A lot of stocks which have been beaten down of late have seen a big reaction in today's market. So looks like some bit of interest is back from domestic investors in the broader market names. The index itself is up another 0.7 to 0.8%. So big move there. So that's the clear story of the day. There is a lot of momentum back in the broader market stocks, the mid and the small cap names. Technically too, we are above that very crucial support of crucial resistance of 24,950. If we close above those levels in today's market, you might see further short covering rally in the broader market. So that's the sense that from a technical point of view, it looks like there could be further short covering rally. The big sector of the day is clearly the IT index. It's a combination of both fresh buying as well as a bit of short covering as well in the IT, and that led to a bit of big outperformance. So the index is up 2%, and a lot of individual names are buzzing as well. For IT, there are a couple of sales notes as well, which are suggesting that the positioning in IT is very, very low from an institutional point of view. Both the FIs and DI holding in the IT basket is at a multi-year low, and hence you might see a bit of an uptake there. So that explains a bit of move in the IT stocks today. But clearly, the last couple of days, the big momentum seems to be in the broader market names, and that's why you're seeing a lot of winners as well, backed by institutional buying as well in many of those stocks.
That, Nimesh, and what about stocks?
So the first stock on my list is India Cements. We've not spoken about this stock for a while now. It's been in a very narrow range in the last many weeks, but now there could be a bit of a supply coming in that particular stock. What I mean is maybe an OFS is on the card on India Cements. Remember, the Ultratech owns close to 81.5%, and they need to bring it to 75. So maybe an OFS from Ultratech could be around the corner in India Cements. That's the first name. The second stock is Shriram Pistons. They were at a conference as well last week, and a lot of interest as well from domestic investors into Shriram Piston. I understand one large domestic mutual fund has been accumulating as well. It's a low liquid stock, but nevertheless, some mutual fund interest is back in Shriram Piston. The third name is Vishal Megamart. Across the consumption basket, there seems to be an interest back from large institutions. So expect high delivery volumes, and there is a bit of interest back from larger FIs in Vishal Megamart at current levels. And the last name is Astral. The entire, the pipe space has done well of late, and Astral stands out. There is a bit of interest back from larger HNIs, is what I understand in Astral in the last couple of days, and hence a bit of up move in that stock as well in today's market.
Nimesh, any intel on Ola?
Well, Prashant, I knew the seller yesterday, and which is why it was part of my chatter as well, that one large FI was a seller. It's a bit mysterious that, not many people know as to who the buyers are. I spoke to some large HNI investors yesterday, and none of them had a handle on who are the real buyers. Yesterday, even in today's market, look at the kind of volumes we've seen in that stock. In fact, we just flashed that there was a large block as well. I need to get a color on the block, but generally, Prashant, the feedback is not many larger HNIs are having a sense, or at least they've participated in this up move. So a bit of mysterious as to who all bought in the last couple of days in Ola.
Mysterious buy today also, right? As you said, and we'll need to see who the counterparty is on the other side, who's bought, and in some style, in some force, yesterday and today as well. So that is all for you as we've been sort of getting to you. We'll take a break. We're back. What to buy or sell today for reverse trades when we come back tomorrow with our technical experts in just a bit. Okay, welcome back. I think what we're going to do is go across to Nigel, who's walked across to the F&O desk to run us through the stuff which is moving, the stocks which are in focus. Nigel, over to you.
25,100. That's the important mark that we'll have our eyes on for tomorrow because that's where the weekly expiry plays out. And the PCR has moved up now. The last time I checked, it was more than 1.3 odd. The two strikes that are very active, in today's trading session. You have the 25,000 put, 25,100 put. Both of them, open interest out there has surged on both those two. 25,050 put as well is seeing aggressive writing in today's trading session. Just take a look at the premium. The premium's come down by close to around 45 to around 50%. But the 25,100 call, just take a look at it. You've got the direction right. If you have bought that particular strike, this is, I'm talking about the 25,100 call, but the premium is down because the writing aggression is very, very evident at that particular level. So that 25,150, that becomes the crucial level that these bears will look to defend. Important to track that. Getting straight to the stocks then, we are seeing some fresh buying on Eternal. Big move on the stock. Open interest built up as well, and that one is actually looking quite good because the kind of rally that we've seen and the momentum is with that counter. RBL Bank, the street was sniffing some kind of announcement. Maybe it's taking longer than what they're estimating, and that's why, in fact, there is unwinding on that particular counter. And there are two stocks that I'm looking at in today's trading session. PG Electroplast, it gave you that bounce this morning. The problem is, in all probability, that one goes back into the F&O band. So PG Electroplast is the first stock. The second stock that I'm looking at is Kalyan Jewellers as well. As per current calculations, unless something drastically goes wrong, both these two should get back into the F&O band once we get the list out later this evening. And just one more name I wanted to highlight. Astral Limited, one of the big underperformers. We had highlighted this earlier today as well. Promoter entity coming in there, chipping in with some, buying some stake out there. And in the futures market, there appears there is some unwinding and there is some shots that are covering out their positions. Back to you.
Thank you very much for that. Rahul is back with us for a few BTST calls. And just to take stock of how the market technicals have moved in the last 1 hour, well, still up close to about 60 odd points. Sometime back, we were up nearly 100, so we've retraced a bit, but it's still a pretty decent session. Rahul, as you can see, a little bit of a come off in the last 10 minutes. Any trades?
Yeah, so we are still closing off well above the 25,000 mark, and there is a good case for the Nifty to go higher. Apollo Hospital is one setup which is looking pretty promising. A bullish pull and flat pattern seen on the daily charts. One can look to buy at these prices for a BTST trade. Stop loss placed at 7,800, and there is a good possibility this goes towards 7,950 and even 8,000 as well. So Apollo Hospitals remains a top pick for the BTST trade.
Thank you very much for that. Mayuresh Joshi is now joining in on the show now. Mayuresh, first, the stock of the day, Nazara, down 12, down 13%. What would you advise people who hold Nazara? If you have to completely write off the investment in Pokerbazi, in Moonshine, which holds Pokerbazi, what would the fair value be? How do you expect this to play out?
Afternoon, Rima. Also, I think one, we need to probably look at the finer print in terms of what the online gaming bill is probably expected to bring about. And therefore, from a regulatory perspective, obviously the price action has been exhibited onto the stock. From an equity valuation perspective, obviously I think the investments that they've probably made in Pokerbazi to the tune of 800 odd crores, the management also adhered to in the morning as well. There is a risk attached to that if the bill goes in the same avatar that is expected, or what the street is probably believing it to be. And if that really happens as an eventuality, somewhere I think the risk of writing this entire amount off to a certain extent happens, or they probably need to tweak it even further to probably ensure that it becomes more skill-based or some tweaks in terms of additions onto the platform that they can bring about. So in my opinion, again, I think the kind of reaction that you're probably seeing on the stock has been a little bit too harsh. I think let's wait for the final print of the bill itself, what probably comes through. And what the management probably does if it comes in the same avatar as I'm mentioning, whether they have some tweaks done to the platform. But yes, I think the hit will happen if it comes in the same form. And therefore, I think the kind of loss that Nazara has probably witnessed, there might be some more pain that Nazara might have to endure.
Okay, all right. You know what, Mayuresh? Today is a big day for us in the studio. It's Prashant's birthday, and we're getting into the celebratory mode. And no better time than talking about a drink. So we have Yash who's joining in to tell us what he's picking up with regard to Sula Vineyards. Yash, It's wine for you?
Well, Nigel, unfortunately, I'm only going to talk about the drink and nothing beyond that. But
Don't rule it out. Don't rule it out. Don't rule it out.
Of course, as you said, it's Prashant's birthday, exactly. Never know what's coming there, right?
Go for it.
But yeah, what we're picking up from our sources is that Sula Vineyards, which is, of course, the biggest in India wine producer as well as seller, is looking for a major diversification as far as its business is concerned, which has been entirely wine so far. What we've been given to understand from our sources is that Sula Vineyards is looking to enter the premium spirits category. Now, according to our sources, this would be in categories like whiskey, scotch, as well as vodka. And the company, that is Sula Vineyards, is in talks with 2 to 3 small players for acquisition of a brand. And as per our, the indication from our sources, this acquisition could be announced and concluded soon is what we've been given to understand. What is the intention? Essentially, Sula Vineyards sees great potential in leveraging its already existing distribution network, the wine distribution network, to sort of expand the business once it enters into the premium spirits category. As far as its distribution network is concerned, it's got about 25,000 point of sale touch points across 23 states and 7 union territories. So it's quite a widespread distribution network, which the company has already put in place, and that could be leveraged as far as the new business opportunity itself is concerned. As far as its potential to acquire, a company is concerned, the company has a healthy balance sheet where debt to EBITDA, stands at 1.9 times. So of course, that supports any kind of acquisition move which the company has to make. And we've written to Sula Vineyards on this particular story. The company has said that they do not comment on market speculation. Also, the management continuously evaluates logical avenues to enhance revenues, profitability, as well as shareholder value. So along with wine, now it's premium spirits, which would be awaited by the market for Sula Vineyards.
Charles. Okay. All right. Yash, thanks a lot for joining in and filling us in with that. The stock, remember, has been a big underperformer, but they're looking at reinventing themselves. Let's see how they go about that. So we'll slip into a short break, come back. We have a few more questions for Mayuresh. Don't go anywhere. Welcome back. A few minutes to go before we wind up trade. But let's get Mayuresh Joshi back on the screen. Mayuresh, I wanted to ask you about this hotel chain. Taj GVK, the one that GVK Group, they obviously own the properties, and the one that manages it for a fee is the Taj Group or Indian Hotels. Now, the stock valuation-wise has some comfort. The problem is they haven't added rooms at that sort of a pace. But as per their release in Q4, they'll be commissioning one of their units, which is very close to the airport, 250 rooms. It has valuation comfort, but do you think you would like to get in this, or would you like to stick to the leader? Indian Hotels, premium valuations, adding capacity. Would you prefer that name?
So Nigel, again, I think from a Markets with India perspective, we've always liked leadership stocks, and therefore I think within the hospitality space, Indian Hotels and ITC Hotels is something that we continue holding in our portfolios. Valuations are very, very dear, specifically for Indian Hotels. But I think the expectation in terms of the product mix that they're expected to grow, whether it's their premium suite or even Ginger as an example, and even their mid-level hotel offerings, I think there is sufficient room for growth over the next few quarters. And that's what has been exhibited from an FY30 perspective when they have put out their forward numbers, which is priced to perfection. But again, I think there is a potential that they can do relatively better in terms of ARRs. So from a holding perspective, I think Indian Hotels ITC is something that you hold. But for Taj GVK in particular, I think the areas that they operate out of, the expectation in terms of ARRs actually remaining steady state is a huge possibility. They are doing additions. They have done a few additions in the last few quarters, and they are expected to do some additions as well. And therefore, I think the size at which they operate, the areas in which they operate, and the ARRs which are expected to generate with the valuation comfort, I think within the mid-size hotels, that becomes a very, very good bet.
Okay, no, absolutely. And we've been sort of talking about some of this, but, the big one, of course, is been Ola. Mayuresh, do you have any views here? As someone said, when things go from very bad to just bad, I mean, the rate of change can be very large. I don't know if that is what is happening here, or this is just coming off very bombed out kind of levels. Any thoughts?
So Prashant, first of all, I think wishing you a very, very happy birthday.
Thanks, Mayuresh.
I just messaged Nigel that me and Nigel are free in the evening, so you can call us wherever you want.
Yeah, Mayuresh, I'm just messaging you at the venue. Make sure you're there.
Nicely
done. Don't drive and come, because it's going to be a crazy party. Prashant's birthday.
Mayuresh, nicely done, huh? Poker face.
So jokes apart, I think when you talk about Ola, right, and I'll be taking an Uber, not an Ola, for coming out there. So I think when you're probably talking about an Ola as an example, I think there is still sufficient expectations of a turnaround expected to happen, and therefore we'll wait and watch. In fact, our founder, who's no longer there, William O'Neill, has a very famous quote, Prashant. I think I've never met a successful pessimist, but I don't want to use this quote for Ola.
I don't want to use the code for Ola.
Yeah.
Okay. I think that says a lot. 18% higher, humongous volumes. And as Nimesh and I were discussing, we'll see if we figure out who's the buyer, right? I mean, yesterday, today, but there is a significant amount of activity which is going on. All right, we'll see. Market closing, Mayuresh, just stay with us. I'm just going to wrap up things in terms of where we land. So I think about 70 points higher on the Nifty. 25,050 is where we finally end. The Nifty Bank, interestingly, ends slightly lower, about 0.3%. Actually, Bajaj Finance, Shriram Finance, etc. are down and out. The mid and small cap indices were up 1% yesterday. They're up exactly half of it today. But good run, half of 0.45, mid-cap, small-cap index about 0.25% coming through there. But it was really single stocks across a wide range of sectors, very disaggregated sort of list of names with huge volumes and lots of price gains, which really, I think, kept us busy through the bulk of today's trading session. Rima.
Okay, let's run through the movers then. On the way up in the large cap screen, Infosys, Nestle, TCS, HUL. So the top four gainers are from IT and consumer. So these are the sectors coming in for buying. NTPC did well. Tata Steel, Grasim also higher in trade. On the way down, BEL continues to see some profit booking. In fact, defense has been a bit subdued. Banks were under pressure. The Nifty Banking Index ending with a cut of about 160 points. Names like Kotak Mahindra Bank and ICICI Bank, IndusInd Bank losing between 0.5 to 1% and Reliance Industries was a bit of a drag. The mid-cap index ends off the highs but up close to about 0.5%. The big gainers here include Ola Electric, Protean eGov. You had a few hotel names like Lemon Tree, ITC Hotels surging in trade. Mahindra EPC also rallying on very large volumes. On the way down, Nazara Tech, JSW Cement, Shriram Fine, IRB Infrastructure, Vedanta was also one of the stocks under pressure. Well, that brings us to a close. Markets closed up with a gain of about 70 points, exactly at the 25,050 mark. Thank you for watching Closing Bell. Don't go anywhere. Markets Forward comes up next.